Bismillahirrahmanirrahim. In the previous class, we discussed about the professional ethics and objectives of audit of financial statement. Today, we are going to discuss the concept of audit evidence. Now, what is audit evidence? Audit evidence is all the information used by the auditor in arriving at the conclusion on which his opinion is based. All the evidences that the auditor is using in making an opinion, in arriving at the conclusions on which his opinion is based. So, there are lots of sources from which auditor is collecting evidences. It includes the information contained in the accounting records. He is collecting the evidence from accounting records, underlying the financial statements and other information, underlying financial statements and other information. And he is also using some other information. But mostly he is taking information from the accounting record, from the financial statements and other information. Now what is other information? When it will come, then we will discuss. It is obtained from audit procedures performed during the course of audit. Now audit is not this that he is coming and he is checking each and everything. There is a procedure of audit. There is a complete guideline for performing an audit and may include audit evidence obtained from other sources. He can also get information from other sources such as previous audits. He can get idea from the previous auditor's report and a firm's quality control procedures. He can also get information from the quality control procedures, different procedures. There will be standards. So he will check whether the company is following these standards or not for client acceptance and continuance. Accounting records generally includes the records of initial entries, journal entries, and the supporting records, means when you are making payment. So there will be payment through check, so record of that check, or some what we call it when you want to purchase something, so you are sending some what we call it, I forgot, different reports, different form of statements to different companies, different suppliers, I forgot, whatever that is, such as then different supporting records. In these supporting records, there are checks and records of electronic fund transfer. If we are making payment through Western Union or SWIFT, so there will be electronic fund transfers. If payment is made, online payment is made, so there will be a record of that. There will be invoices, you know about invoice. There will be contracts. The general and subsidiary ledgers, you can get information from these ledgers, the journal entries and other adjustments to financial statements. So we are getting record from these and we call it accounting record. In accounting record, so mostly we are getting our evidence from the accounting record. In accounting record, the journal entries, the fund transfers, the checks, the contracts, subsidiary ledgers and other things. So we are getting information from all these sources. The entries in the accounting records are often initiated, recorded, processed and reported in electronic form. Nowadays all the companies, majority of big companies, they are using electronic form of accounting, that is Peachtree, QuickBook, and these things, and different softwares. So they are using different softwares, so it is in electronic form. These reports are initiated, recorded, processed, and reported in electronic form. In addition, the accounting records may be part of integrated system that share data and support all aspects of entities' financial reporting, operations, and compliance objectives. So, the accounting records may be part of a system, integrated system that share data. Data will be available on that and support all aspects of entities' financial reporting, operations, and there will be complete record of financial reporting, their operations, and their compliance objectives. Auditor obtains most of the audit evidence from accounting records of the entity. If accounting records do not provide sufficient audit evidence, the auditor obtains other audit evidences. But keep in mind, most of the data, most of the evidence gathered by auditor, it is from the accounting record. But if accounting record is not providing us enough information, then the auditor is obtaining evidence from other sources. So audit evidence is just simply if there is a transaction, so we are collecting data whether this transaction happens or not. We purchase something, whether there is proper evidence of that attached to the voucher or not. When we sold something, so whether we followed the main principles of the company in selling that thing or not. So there will be a complete procedure and we are checking whether this thing happens or not. For checking that, we are collecting evidences. If you purchased a land, so there must be an evidence. There must be documents of that land. If you purchase a building, there must be documents of that building. If you purchase shares, so there will be some report of that you purchased these shares. So we call it audit evidence. Now, we talk about this thing that mostly auditor is collecting evidence from the accounting records. Other information that auditor may use as audit evidence includes minutes of the meetings of the board of directors, their minutes. Minutes here means the points discussed in the meeting and the report on that meeting. Confirmation from third parties. Suppose you purchased something from, like you purchase, suppose inventory. So there will be mentioned that we purchased this inventory from this supplier. So we can go personally, we can visit, we can make a telephone call, and we are confirming that thing whether there is a purchase of that thing or not. So that is called third party confirmation. Analysis report, different type of analysis. We are also collecting information from these analysis reports. Suppose if you are purchasing something, so you have made some analysis, and on the base of analysis you are going to purchase something. Whenever you are making a decision, so that decision will be on the base of analysis. So there will be analysis report, so that, and on the base of that analysis report, then they made decisions. So we are also checking these analysis reports. Comparable data about competitors, that is benchmarking. We are comparing our data with other companies, with competitors. That is also a source of information. That is also a source of evidence for the auditor, that they are comparing their sales or they are comparing their purchases with the competitors. Control manuals, there are some standards set by the company. We call it control manuals. So then at the end we are checking that these controls manuals are followed or not. You can say budget. Budget is also, you can say, a control manual, because in budget we discuss that we will spend this much money on this thing, this much money on this thing, this much money on this thing. So then at the end of year, auditor is coming and he is comparing the real expenditure with the the budgeted expenditure. And there are different other control manuals. So we are comparing the data with the control manuals. Information obtained by the auditor from such audit procedures as inquiry. He can personally make an inquiry, he can make an observation, he can make an inspection. Suppose if you purchased land, so he can personally visit that land. If there is a building, he can personally visit that building, whatever that is. If you purchased a plant, so he's making an inquiry, he's making an inspection, he is making different type of observations, and on the basis of that he is collecting evidences. And other information developed by are available to the auditor that permits the auditor to reach conclusions through valid reasoning. And there are different other sources he can use, different type of other information he can collect and use as a evidence. So these are different sources of evidence. So we discussed about the audit evidence, that audit evidence is all the information collected by the auditor, and on the basis of those evidences he is making his opinion. The main source of the audit evidence is the accounting record. Except accounting record, he can use different other sources for collecting evidences, just like I told you, the minutes of the meeting, confirmation from third parties, just like I told you how third party confirmation, you purchased inventory or you purchased furniture or you purchased machinery, and from supplier he's calling him or he's personally visiting and he is making a confirmation that whether this company purchased this thing from you or not. Analysis reports, different type of analysis. On the base of those analyses they are making decisions, so they are also checking these analysis reports. They are also comparing the data of the company with the competitors, and this thing is also used as an evidence. Control manuals, just I told you, budgets and different other control manuals. Information obtained by auditor from such audit procedures, like this is audit procedure. Inquiry, making an inquiry about something, making an observation about something, making an inspection about something, because he want to collect exclusive evidence about that thing. And other information developed by are available to the auditor. He can also use different other sources of information. Now, areas of audit evidence. An auditor obtains audit evidence regarding management assertions. In the second chapter, we discussed about assertions of the management. Need or claim, the claim of the management for the following areas. Different areas, we discussed about all these. Now, auditor made some claims that the transactions existence of a transaction or existence of an asset or liability. That the first thing is an asset or liability exists at balance sheet date. Now he made an assertion that whatever is present in the balance sheet, assets or liabilities, these exists. Land, building, furniture, machinery, this, that. So all these things, these exist. This is an obvious assertion with such items as land and buildings, stocks and other assets. So now what will auditor do? He will check, he will inquire about all these things, that these things exists or not. Land, buildings, stock, machinery, each and everything. He will check the existence of these things, that whether these things exists or not. So this is the first area of the audit evidence. Then the second thing is rights and obligations. Rights regarding assets, obligations regarding liabilities. An asset or liability relates to the entity at balance sheet date. In balance sheet, they mentioned that we have this much assets and these are our liabilities. So they made an assertion that these assets, we have right on these assets, and the obligations, we have to pay these obligations. This means that the enterprise has, for example, ownership of an asset. If there is an asset, so they must have the documents, the ownership documents of these assets. Like if land, so there will be ownership of that land. Building, so there will be ownership of that building. Ownership as an idea, purchase or lease, which is not simple, and there may be all sort of rights and obligations connected with a given asset or liability. Now keep in mind, if something is mentioned in the balance sheet, assets or liability. So for assets, they have rights. Right means that you have legal documents and you can use these assets. And obligations means liabilities, and for these liabilities, there are documents that we took this loan from this bank or this financial institutions, and we have these documents. The third area of audit evidence, it is occurrence. A transaction or event took place which relates to the enterprise during the relevant period. There is a transaction and there is assertion of the management that yes, this transaction took place and this is related to the company. It may be possible for false transactions. You can make these, you can write the false transaction, or there is no transactions, but you record that transaction. In fraud, people are doing this thing. It may be possible for false transactions, example given, sales or purchase, to be recorded. That is, maybe there is possibility that you record some false transactions. You record some, we can say, you made some fraud and there was no transaction, but you record it. The assertion is that all recorded transactions actually took place. So now auditor will come and he will check this thing, that whether these transactions, these are actually related to the enterprise or not. That these transactions which are recorded, they actually took place. I told you sometime what is accountant doing, that a transaction which is not occurred, they record it. Why? To cheat you. But when auditor is coming, so he is checking the occurrence of all these transactions. Completeness. There are not unrecorded assets, liabilities, transactions, or events are undisclosed items. All the data that is recorded, it is complete. There are nothing is left unrecorded. whether it is an asset, whether it is a liability, whether it is a transaction or event. This is important for all accounts item, but is especially important for liabilities. This completeness, it is important for all the transactions, but it is much more important for liabilities. Valuation. Valuation means an asset or liability is recorded at an enterprise carrying value, at an appropriate carrying value. The assets and liabilities are recorded at appropriate value. The real value. Appropriate may mean in accordance with generally accepted accounting principles, the Companies Act rules, accounting standards requirements, and consistent with the statement of accounting policies consistently applied. That we followed the generally accepted accounting principles, we followed the Companies Act, we followed the accounting standards, and we followed accounting policies consistently in the valuation of all the assets and liabilities. Then there is another thing, another area of audit evidence, that is measurement. A transaction or event is recorded at the proper amount and revenue or expenses allocated to the proper period. Keep in mind, measurement means that suppose this is 2019. So the data recorded in 2019, it is actually recorded to 2019. Nothing of 2020 and nothing of 2018 is included in this. The revenues and expenses mostly. So measurement means that all the transactions are related to this period, this 2019 period, and auditor will make this thing sure that yes, this data is related to 2019. So for that purpose, he will use audit evidence. Presentation and disclosure. An item is disclosed, classified, and described in accordance with the applicable reporting framework. All the presentations and disclosures, we followed the standards, the applicable reporting standards. For example, fixed assets are subject to company's ordinance rule and to IAS 16, International Accounting Standard 16. For fixed assets, you will follow International Accounting Standards. And we followed this accounting standard, and the disclosures made related to fixed assets, it is according to the International Accounting Standard 16. So this is all about the areas of audit evidence, that you need audit evidence for checking the existence of assets and liabilities. You need audit evidence for the rights and obligations of the company, for the occurrence of the transactions, for the completeness of transactions. Nothing is left. Auditor will come and he will check whether these transactions are complete, nothing is missing, these transactions actually occurred, nothing is, there is no cheating, there is no fraud, whatever that is. Valuation is made according to standards. He will check this thing. He will check whether the data of 2019, the revenues and expenses of 2019, it is actually of 2019 or something is included from 2020 and 2018. And presentation and disclosure, it is complete, and we followed the standards, International Accounting Standards, in these presentations and disclosures. think for today it is enough. Inshallah, in the next class, then here are two examples. So we will discuss these two examples. Here is one example or two examples. One example, I think. One. Yes, it is one example. So inshallah, in the next class, then we will discuss about this example of audit evidence. Assalamu alaikum.